Thank you, Angel, and Heidi ho, everyone. Welcome aboard. It is Tuesday already. How does that happen? Do I say that all the time? I think so. Anyway, welcome aboard. It's nice to have you there, it being Tuesday or any other day of the week. Who gives a rat's what day it is? Well, I suppose we should, shouldn't we? I see a question. I thought I saw a question before we went on air. From Gary, $yen weekly last bar, a game-changing bar, question mark. Okay, let's have a look at that. It looks like the dollar is being bought up in big licks at the moment. I should have a $yen chart there somewhere. Yeah, this is going to be a good one, I think, Gary, because the rule is that the low of the bar needs to be lower than the previous day, closed on or near its high. Certainly it's closed on or near its high without question. The only question is, has it closed, has its low, or is its low lower than the previous day? So the only way I can do that on this chart is have a look at those figures. 109.106 is the low of that one, and 109.114, so it doesn't qualify. That said, let's have a look on another chart. I will just change screens and go to that one where you can't see Jack. That's what I want you to see. $yen. There we go. My God, whose template is that? Let me get rid of it. I'll go nuts with that. Blank. That's good. Okay, so weekly chart. I think it's going to show me the same thing. Low 109.113 and low 109.120. So answer is no by a bee's dick, Gary. Nothing in it, mate. Absolutely nothing in it. But if it doesn't fit the criteria, then I don't use it. So whatever works in your own language, I suppose. I actually had that as a game changer bar. Wonder what chart I was looking at. Certainly not one of those two, that's for sure. Anyway, I hope that answers your question. And those of you who don't know what a game changer bar is, they look very much like that. That is the game changer bar the day before. Because its low was lower than the previous day. It closed near its high, not on its high, but near its high is good enough. That was a game changer bar the week before as well, as was that one. Not one of them's done anything. This is $yen we're talking about. And as I say, they're piling into the dollar like it's going out of fashion at the moment on all charts that are in front of me anyway. Euros crashing, pounds crashing, dollars, Aussie crashing. Yeah, interesting. Buying up the dollar. That may mean something for the FTSE when Ash comes in. May mean it's going in the opposite direction. I don't know, but we will see. Let's talk.
I am in with you, mate.
G'day, mate.
Nice and early today. Yeah, I think you're probably right. I think the FTSE is probably going in the wrong direction, looking a bit ominous. So when you're done, I'll show you the chart.
Well, I'll just have a quick look at the pound to see if it's worth trading. Yeah. And it's gone back below our entry from Thursday. Where am I here? I'm all over the shop. That's because the control panel was not there. There we go. Righto, you should now be able to see my pound charts, and it is an hourly chart that we're looking at. So I'm kind of thinking that maybe we are in a range here now. So this may well be worth a shot today. Let's have a look. So we've got that. And we've got that, which is not that big. About 70, 80 pips. Yep, 75. I think we might have a go at this one today. So entry is going to be 5 above here. Have I got time, mate, to place this order?
Oh, yeah, go for it. Yeah.
Okay, now those of you who are not familiar with the pound US dollar breakout trade, it's something that we try to do each and every day, but it's around certain parameters. We're looking for a 2.5 to 1 breakout, and we are not satisfied that the way we're trading it is the best way to trade it yet. So for that reason, you need to be thinking, don't trade it, or if you are going to trade it very, very small risk. As I am doing, 1.3728 is the high of that bar. Let's call the entry 1.3733. That's just adding 5 pips to the high of the bar. 1.3733, and the stop loss will be 3 pips below the low of the range, which is this bar here. And the low of that bar is 1.3652, which becomes 1.3649. Okay, so that is one of the orders that we place. It is a long order. And what we're trying to do here is catch the breakout of that range, right? So if we get triggered into that, we won't be in a short. But if we now place a short, just in case it goes to the downside, whichever one triggers, we cancel the other. So we'll place the short as well, which would be exactly the opposite of the long. So, of course, I've forgotten them. It's a sell stop at 1.3649, if my memory serves me correctly. And yes, I will say it, I do remind the elephant, so it should be right. 1.37, 3734. Pretty sure that was. Let's call it 3734 anyway. I reckon we've got that. So we placed that. No, it must have been 33. All right, I'm just going to leave that there for now, and I'll fix it. But it was 3733 by the look of it. So you can change that pip if you want, if you are looking to follow that. If not, so be it. Righto, Ash. Look, I've got a few things to look at, but most of them have already left the station, waiting again on pullbacks. Seems to be the case this week so far.
Yeah, let's have a look at the FTSE. The FTSE is definitely looking very weak this morning, and I haven't placed anything because I hedged out yesterday, and I probably will just leave it on the hedge right now. I'll show you what I've got. I think it's that one we need to look at. It definitely looks like it could start to break down here. I might well take another trade to the downside. So effectively, I might flip positions. I flipped a little bit yesterday and took a little chunk out of the loss here. But I've got a couple of trades on long up here, a couple of trades on short. So we are hedged out at this particular stage. But when you look at this chart, if we look at the 15, just a little bit more detail here, we are just on top of there right now. So there's another level here, which if you are only looking at a small part of the chart, that's what you'd see, and you think, okay, we've broken down, but actually there's a little bit more support here. So I'm not that keen to get involved just yet. I think the FTSE, if it collapses, I don't really mind because the hedge is in place, and if in some respects, I think there's what's that, mate?
No, we just lost you for a minute, mate. You're breaking up.
Oh, sorry. Oh, okay.
You're back now.
Let me just double check that.
And Gary, to answer your question, mate, yeah, it's a matter of personal, I think. It's probably not a bad idea to cancel it or to close it because it has been above the range and it's now back to the middle of it. So, yeah, I'll defer to your judgment, actually, and cancel it. Get out of it. Yep. Stick with the one we got.
Yeah, so on the FTSE, mate, I'm just trying to bag a little bit. Now the thing is, we're in a buy zone. If we look at this on some longer term time frames, you can see there's some support here. Probably, this is quite interesting in some respects because this is kind of suggesting that we could be in a bit of a range for a while. That may not be the case. This might just break down and completely ignore this left-hand side. But this is on my mind at this particular stage. And when I look at this, as I say, this is a buy zone. We are at support. So really, I'd much prefer to look for the long at this stage rather than the short. it does look a little bit weak. I think there is I think there's a pretty good chance we do actually get the long in here. I just don't know if there's enough room. There probably is. It's probably just about enough room to get a little bit out of this market, but I don't think I'm going to do that. As I said yesterday, what I tend to do is flip my parameters. You know, I don't mind sort of like trying to go for a little bit of a grab if there's one on offer, and this looks okay. It doesn't look too bad for a little bit of a long. But I've got in some respects, I've got quite an easy point here because I don't have to go after something which looks a bit tricky, and it looks a little bit tricky. I think the long is in the market, but it does look a little bit tricky. So I may well avoid this just for a little while and see if I can get it a bit clearer. If it comes and touches that level down there, which is another 5 or so pips down there, then I might well trigger it because it'd be a bit easier to kind of get a nice short-term boost. But from here, you know, I'm not so sure. I think because the range is getting a little bit tight, there's not that much room in here. So I might take the long if there's one on offer, just a bit lower because it looks okay. Looks like the long is now starting to filter through, and it looks like we should be able to kind of like just move a bit higher here. And probably grab a little bit of upside. Looks like it's just starting to move a bit now. And what I can also do is if I think it's going through these levels, I could take one of these hedge positions off and see if I can move it up a little bit if it starts to move. But there are pivots here, which we can't see on this chart. The overall picture, though, is looking a bit heavy. You know, this does look like it's possibly going to come down a little bit further, which is another reason I don't really like the long just yet. I wouldn't mind it here, and look for sort of something to hold on to. Wouldn't mind that at all. I wouldn't mind it even lower down here if I could get it. Question is, you know, what are we sort of saying is driving the markets? The euro seems to be suffering right now, and we've just had the German elections, and there's a little bit of uncertainty over in Germany, because even though I think it was Schulz that effectively came out on top of the election, and it looks like he's going to be the one that's going to be able to form coalitions. There will be coalitions in
Schulz.
And what's that, mate?
Schulz. I know nothing. Is that what you said?
I'm pretty sure it was him. I will double check my
There you go. Well, can we trust him? That's the thing.
My word.
I know nothing. I see nothing.
That's Manuel.
No, it's not. It's Schulz out of Hogan's Heroes.
Oh, okay. Well, I know nothing. Is it's also the guy from Faulty Towers. He used to say that.
Yes, yes, Manuel. Okay,
yeah.
Okay.
It is Schulz. So it's Olaf Schulz. So he is the SPD, and there is a few different possibilities of him forming this coalition government, and this is why we might be seeing a bit of uncertainty with the euro for a little while. I think the most likely that he's going to try and go for is a coalition with the Green Party and the pro-business party. So there's already a little bit of a clash there, because the Green Party might try and force some sort of program that will enable the environment to flourish while raising taxes, which is not going to be kind of good for the I think they're called the FDU, which is the Free Democratic Business Party or something, or FBU. I can't remember the names, but it does appear that that there could be. It could be tricky. It could be trickier for Schulz than it initially would seem, or he could form a big grand coalition with the other major party over there. But there are other connotations, and it doesn't appear that it's going to be that simple for him. So the road into it might be a bit tricky, and we might not get a government in Germany for a few months, and we know how these things kind of can draw on, and that might well. Just suffer the euro. You know, the euro might suffer off the back of it, possibly. So there's that to consider. We had Governor Bailey yesterday, effectively saying that all the issues that we kind of got ahead of us right now with supply issues and supply chain issues and a lack of drivers in this country, the expansion has slowed down. Now, the problem with the expansion slowing down is that it's slowing down in such a way that because there is a supply issue, what happens to prices? They go higher. So you've got an expansion slowing, you've got prices going higher, inflation starting to pick up, double the amount of their 2% target. And the one tool we know they've got is to raise interest rates, which could potentially choke any kind of growth. So this is why I think bearish on indices is the best course of action, because if you think about it, it's almost the perfect storm for an indice. You got a lack of growth and potentially higher interest rates. So coming relatively soon. So equities just don't look attractive anymore, mate. The signs and signals are basically saying the collapse isn't ready yet. It's almost like we're not ready to kind of to take our finger out of the hole of the dam and just let it completely explode and the dam collapse. But it does feel like the pressure is mounting. And when you get these central bankers kind of coming out and, saying the tone that Andrew Bailey struck yesterday was concerning, was very, very concerning. And it doesn't look like these things are changing. The UK's got a huge problem with petrol at the minute, where we haven't got enough drivers. Brexit, is being blamed, and I suspect it probably was Brexit. I'm sure the government will say it was COVID, but Brexit's being blamed for the lack of drivers taking fuel to petrol stations. Huge queues outside of petrol stations. People can't get fuel.
Sorry. You mean delivery drivers to the petrol stations?
Yeah.
Is that what you mean? Right.
Yeah.
Gotcha.
Yeah. Just a huge lack of them. So the government are now going out and doing emergency measures, trying to go over to European countries and give them a 6-month visa so they can come over here and do some work. And these drivers are saying, no, we're not interested, and rightly so in a way. So this is what we talked about a few years ago. What is going to be the upshot of Brexit? And it's this kind of thing that starts to manifest. When you have a problem like COVID straight after Brexit, then Brexit becomes magnified. It becomes accentuated. Whereas if it hadn't happened, it's possible that those clearer waters everywhere else in the economy could have allowed them thinking time and thinking space. How are we going to get over this hurdle and this hurdle and this hurdle? They've had no time to do that because all they've been thinking about is COVID. Just like when the economy was going down previously, because all they were thinking about was Brexit. Now their eyes off the ball on the most important decision that the British people had made in decades. Because of COVID, and they haven't been able to sort certain things out. And this is just one issue. Obviously right across the board, across the globe, we've got semiconductor shortages and lots of different things going on. So across the globe, there is a potential for interest rate hikes because of them being forced into it, which is the worst possible scenario. It's not like they can do it because there's expansion and they don't want the economy to overheat. It's not a case of the economy overheating. This is a case of prices getting out of hand, and the major tool that they want to leave really in the toolkit having to be used and brought out. So it's concerning, mate. It's a very, very concerning period, and as I say, equities should suffer.
Yeah, look, apart from everything you've just mentioned, oil is now at a 3-year high.
Yeah,
it may or may not go through that level, but if it does. Then look out. Those prices won't turn around anytime soon, that's for sure. Yeah,
well, I can tell you that the FTSE opened up relatively negatively. Royal Dutch Shell up 2.5%, BP up 1.5%. And this is because both of those companies are going to benefit from this lack of supply to petrol stations. Because guess what the lovely people at BP and Shell have done? They've raised the price of petrol. So
they wouldn't do that.
You wouldn't do that?
They wouldn't do that.
I'll tell you what, the poor people that probably work in the forecourts are getting feathers spat at them on a consistent basis right now, while the fat cats sit in there around their boardroom counting the money. So where BP and Shell, I tell you, I mean, this is the thing. We talked about the fallout of COVID and the companies that would find it difficult to recover. EasyJet, I thought was a great example of a company that was in great shape before COVID. Travel stocks got hit, obviously. Debt started to rise in the company, and if you look at their debt levels, they are fairly out of hand. So you got airline stocks getting this situation where they're the debt levels rising, and you think, okay, well, what will fix that? What's going to fix that for the likes of EasyJet? Well, of course, the best thing to do is raise your prices. Try and claw back some of that money that you're paying out by raising the prices of a seat. Well, that would be absolutely fine if there was enough demand, but there still isn't a demand there. You know, we got yellow, amber, we got orange, we got the multicolors of a traffic light system that you have to go through to say, is this country within this band or this band or this band? People having staycations, people still worried about COVID. So the airline industry isn't picking up. Now, on the flip side of that, you've got the oil industry, you know, also in the mire when it came down to COVID. Nobody was buying oil, and there was huge kind of supply issues where there was too much supply effectively. And then you've got these perfect things happening, perfect storms happening for the oil companies. Lack of drivers. Let's raise interest. Let's raise the price in the forecourt. We'll claw back some of our problems there. Oil going through the roof. On the whole, let's claw it back there. So the oil companies now are really starting to benefit from the reverse of what happened with COVID, where some companies are not. And I tell you what, this is going to be even worse for those travel stocks, because how are they going to keep up with the fact that they've got to pay more for a barrel of oil to run their jets, as well as trying to,
and they're poverty stricken. Yes, indeed.
They're in all sorts of trouble, mate. They really are. And there's companies over here. I mean, there's energy companies going under over here as well. Again, pushes the people that can survive in this particular scenario even higher. So there's lots going on right now, which would suggest that if you're a holder of an oil company, you probably be in just about the right place. And I think this is the key with a lot of this stuff. We're traders, right? So we're doing a lot of trading, and we're looking at currencies, we're looking at indices, and we should probably look at the CAD off the back of this. But one of the other things that we should be doing is saying, you know, as investors, whether we're 1 month, 3 month, 3 year, 30 year, doesn't matter. As investors, where are we? And what is likely to benefit off the back of this? And even though BP is up 10% in a very short period of time, and Royal Dutch Shell the same, they still look like they've got some room to travel. ExxonMobil probably the same. You know, the Chevron. You've probably still got some leeway to kind of get on board with some of this stuff. You know, and it's just kind of going around and saying, what's happening out there? What's happening out there? Who's going to benefit? Where we had COVID, kind of obvious. Netflix would do well. Zoom would do well. Anything that was online would do okay. You've got a glut
that's had a deep retracement. Yes,
that had a deep retracement. Yeah, exactly. You've got a glut of problems in the energy sector. Who's going to do well? Well, the oil companies are going to do well. So, you know, we're not in bad shape in many respects, because there's information for us to kind of to get on board with. But I think people could do a lot worse than picking up some of those oil companies right now.
Yeah, don't know the answer to your question, Lewis. It's not something I'm aware of. But the answer will be with the Golden Girl and the Black Golden Girl tomorrow. She'll be able to answer that question. I don't know if you can, Ash, if you've got an opinion whether the oil price currently is due to the weather.
Yes, it is as well. Yeah, absolutely is. Yeah, there has been some issues with weather as well in certain parts of America, I believe. So just too many good stories for oil really right now. Bad stories in a way, but too many positive signs for oil for it not to rally and do pretty well. Where are we at with WTI? Looks like we are.
Well, should I share my chart? Because
sure.
Lewis is reminding me that we have this, or I have this $11 theory.
Yeah.
Remember the $11 theory?
Yeah, I do remember the $11 theory. Yeah, very interesting theory.
And there it is, 22, 33, 44, 55, 66, 77.
Mm.
And we're banging on the head again. That's what I say. If that level goes, where's 88? I haven't got 88 on the chart. Don't think it's as pronounced, is it? There might be just a tad of, I don't think I can get it across any further either. Hang on a sec.
Yeah, so we're looking at another 15% higher, potentially on oil, before it hits the next potential resistance point. But you know, with this price theory.
Yeah, I can't bring any more information on the screen, unfortunately, but that level doesn't look to be that strong, although it might be here. I don't know. Anyway, we've got to get through here. And like I said, that's 3 years since we've been up there. Interesting. Well, apart from, of course, when we just missed out on the 77 before, remember? What was that, a couple of months ago? Well, we're back there again, and we've actually, have we hit 77? 86, 76, 83. So it's not quite there yet. Anyway, it is interesting. Do we look for a bounce off here is the next question I ask myself. And I'm
just so you know, I've taken a speculative long on the FTSE. It's just touched that lower level. Very speculative. Be very careful if you're going to be trading the FTSE. I'm going in extremely light, but I'm taking a very speculative long, and I'll just be aiming for a small move. I'll share my chart really quickly here.
Cool. Then I'll come back and have a look at the pairs that I've got of interest.
That'd be grand. I need to be just moving on in about 10 minutes. I've got to go and do the school run.
Cool.
There we go. Yeah, so I've taken as I say, speculative long here, just as it came and touched that. Obviously, it gets me in a little bit higher because of the spread. And I'll hold it. You know, if it doesn't start to boost up here, I'll hold it. I don't need to. You know, this is the thing about the hedge. I kind of I allow myself at least 2 positions before I need to hedge anything out. And if it starts to collapse here, I won't do too much. I'll let it come down and maybe take the next level. But this is that'll be my next point of call if we start to come down, which is about 35 pips below where we are now. So I should have a little bit of room. And it does look, the market looks heavy. But the reason I have taken that long really is because of the oil stocks. I think there might be just enough gas in those oil stocks to kind of give us a small boost. Now, as I say, I'm not aiming for a lot, so I'll probably try and come out. So if you were to take it here, 15. So, and you know, in fact, for anybody using stops, 47, you'll be going in at 47, coming out around about the 57 mark, which isn't too much higher than this point here. So there's that'll be a target there. And using the stops at the lows, just down here. So it's about a 1-to-1, just worse than a 1-to-1 if you're interested. But it's going to be, you know, I wouldn't take this trade if I was trading with stops, to be honest, mate. I think, you know, it's a counter trend, and it's not a counter trend that I think is going to really continue to the upside. I think it's a short-term move. It might be on, but anybody really wanting a short-term move today, you're better off really looking for the shorts than the longs. It's just that we are in a buy zone, and I don't think we're going to break down just yet. So I've taken that trade on for right now.
You reading anything into market sentiment at the moment? It seems to be switching a little bit.
It is switching, mate.
Short term.
Yeah, no, it is switching. I mean, look at the VIX. So this is a VIX on an hourly chart, inverted head and shoulders coming in down here. So the VIX is showing us that there is fear really starting to kick up again. You know, we're definitely in a phase where the markets are going to struggle. I think anyway. I think it looks like the markets are ready to kind of hit that point of struggle, and it's just a question of timing. I think, you know, S&P. another, the opposite head and shoulders pattern going on here, also in a little buy zone here. So I don't think it's going to break down just yet, but it could. And if it does, I think the S&P has probably got the green light to go. Look at this on a daily. Head and shoulders pattern there, and pretty significant bar, I think, yesterday. Not nice clear signal. So these do look like they're going to be falling down. The market looks like it's, as I say, getting pretty heavy and getting ready to drop. And it's just a case of a matter of when and what. That might well hold it up. So it doesn't look anywhere near clean there. And that's a pretty interesting horizontal level there. So S&P could come down a little bit, trick everybody into the shorts, bounce back up one more time, and maybe fool a few more people as well. So we're not really there yet, mate. And this is interesting, isn't it? You look at this false break. Would you say false break here?
I would. Completely.
So under that point, looks like the trapdoor's opened.
Yeah, and then you have a look at it from you've probably got a first warning with the first phase down. Then you've got an overt warning that took out the lows and gave you your lower low, and now you potentially got a lower high. So you can really look at that from a sentiment cycle point of view as well.
Yeah.
But yes, it has to get through those. Has to get through those levels. Yeah, I agree. I don't think I'd like to be putting a whole lot of cash on the table there right now.
Looking heavy. So anyway, Matt, I better push off.
All right, bud.
I will see you in the morning as always, and we'll maybe when A comes in, then do the same thing and take the last half off or something like that.
We'll see how we go. There might be some interesting stuff to be had. Have a good one, bud.
All right. See you later, guys. Have a good one.
Catch you tomorrow. Okay. Let's have a look around the place and see what I can find. I've done, as you said, Gary, I agree with you 100%. I've closed the pound from Thursday, and we're now waiting for that breakout for today. Now, should I start with the euro? I think I probably should. And the euro's done pretty much as you would anticipate that it might, in that it has reached that level, which was 116.73, and I still think 117 is the key level. But now is the time for euro dollar to tell us exactly what it wants to do. It has given me the indication that this range is now possible, because we do have two clear lows, we do have two clear highs, and to my mind, that is the beginning of a range. It may be decimated in the next 5 minutes or the next 5 hours, who knows? But if we do get a break below there, I'll certainly be waiting to look at and see it come back into the range, give me a higher low, and then I'll look to trade it long. Because you've got to understand that euro dollar is classically a ranging pair once it gets into that range. And as I always said, with euro dollar, the trend is a roadmap to the next range. And perhaps this big range here, it's not by no means fait accompli yet, but if I see a lower high here, I'll certainly be looking to trade it to the high side. As far as now is concerned, 30-minute chart is showing me what's happened. Wow, what a trade that is. If you're trading earlier in the day, that's just exactly what you want, isn't it? A nice little high test bar on the daily pivot. Bang. Gonski. But only to support. So, you could take profit there. You can't be in front of the charts all the time, obviously. But I'm still looking for the long. And I want to really know why the dollar isn't or has been in so much favor in the last hour or so, because that's how it looks on every single chart that I've just had a look at, pretty much. So to trade euro dollar today, I would need to see something of a reversal. So bullish engulfing bar, double bottom, inverted head and shoulders. That's going to take a long time to form. So I'm probably not even thinking euro dollar at the moment. But as soon as I saw that, then I would need to see a higher low to trade it. So there's nothing there for me. One thing I did place an order on this morning which doesn't appear to be there. Why not? That's interesting. Let me have a look at my other chart. Maybe I'm dreaming. Oh, no, I'm not. There it is. It's Kiwi Swissy. I thought I placed an order on Aussie Swissy, but I didn't. Kiwi Swissy. Why? I'll go through this in detail in a minute. But essentially, and interesting that, Gary, you asked the question before about game changer bars. Because on this chart, I don't have a setup. But this is IFS. On Fusion Markets, I do. And I'll show you what I mean by that. On Friday, we had a game changer bar to the downside, which is still playing out, really. It would have been triggered on Monday, yesterday. And on yesterday's bar, okay, you've got a break and probably retest of the weekly pivot, which has been rejected. So you can see where my entry is underneath that bar and my stop loss is above it. But that's not the reason I'm actually trading it. The reason I'm trading it is, I will show you on my Fusion Markets account. I'll just share that screen. There we go. If you have a look at my Fusion Markets account, you can see the game changer bar from Friday, but the bar yesterday is actually an inside bar, whereas on IFS it is not. So I've traded on the Fusion Markets account, but I've also taken the liberty of trading it on the IFS account as well. So why am I doing that? Well, it's one of my favorite things to do, right? If you consider that you've got the game changer bar followed by an inside bar, it's like a pointer telling you the next direction is short, and then you've got a coiling action, or, you know, it's like a spring. It's just gaining energy here. And I think this can explode to the downside at some stage. I won't leave it in the market if the high is taken out, of course, but that's there waiting for that explosion to the low side. I've also got, if I have a look at this, how can I show you that? Good question. Maybe go back to the other chart. Okay, so on this chart, which is the IFS chart, if I draw a line through here, what do I see? I see a false break scenario, pretty much in the same spot. Now, that hasn't played out, but it's still given me a lower high. Hasn't yet given me a lower low, which I guess is what we're going to finish up with if we get taken into this trade. But the monthly pivot there looks really, really good to me. If I look at the bigger picture, it's pretty hard to tell where we're up to, but I think I was showing you the CAD Swissy chart, and have been for some time, and how we're now above that, the bottom of that big range since 2015, and bouncing off the bottom, which was the trade of the week this week, CAD Swiss. This one's a little bit different, Kiwi Swiss, because although it looks very similar, it's come back through the bottom of that range, which is not as clear as it is on pardon me, CAD Swiss, of course. So I believe this one has got potential to go the other way. Yes, I can see an inverted head and shoulders here, most definitely. And if this continues in that vein, then who cares? We're not in the trade. But I see downside here because of that candle pattern. So if you want to follow that one, the order is a sell at 64.61, so 0.6461. And the stop loss is at 0.6510. I'm only risking 0.25% on this because it does have that potential to show me that inverted head and shoulders. It's the only trade really that I've got in the market, but I wanted to show you Oh, hang on. I think I've got a few questions. I better answer those first before I go any further. There's nothing urgent, of course. Long on Euro Cad, Lewis. Do you think US dollar has the strength to push the euro lower? Oh, you know my feelings on that, Lewis. I hate the dollar. I think it's the junk currency that rules the world. So there you go. I'll have a look at the dollar index in a tick. Will you take a long on Euro Aussie in the current H? Oh, okay. We meant to look at that, didn't we? Look, I'm a little bit reticent, but I totally see why you want to do that. But here's the bigger picture for me. Daily chart is showing me all sorts of things. It's showing me that this range here, apart from the big false breakout, the head side, is indeed a head and shoulders, which has now come off the right shoulder, looks to be on its way down to the neckline again. In the meantime, we have bounced off the bottom of the descending channel, which means to me that we're going back to the high side of the channel, right? Problem you've got right now is how do you get into the market? Entering there doesn't work for me at all. Above there, maybe that doesn't make that makes a bit more sense to me. Big bar, you're only chasing it to here, really, maybe to the pivots and then bounce off it again. So yeah, I don't think I'm ready to trade that long right now. Smaller time frame, maybe a higher low in here, give you a nice little inverted head and shoulders. That would make sense. So bounce here, higher low. I can go with you there, but at the moment, it's a no for me. Bar's too big. Would have been nice to trade it off here, of course, Lewis, wouldn't it? Your long Euro Cad. What? What are you doing long Euro Cad? Daily chart. Nice one to the daily pivot. Okay, that makes sense. I couldn't trade it because it's none of my setups work there. Again, I would have to see a bullish engulfing bar would be the first instance here, or a double bottom or something like that, then a higher low before I traded. But nice little scalp to the daily pivot. I can see that. Bottom of trade line. Okay. Since I don't have any trade lines, I could put some on my chart. Aha. Gotcha. And yes, nice little scalp to the daily pivot. Why not? In D1, that one there, yes, absolutely. Yeah, so I get what you're saying, totally. But I think on balance, actually I can see that. And that does coincide with my channel there, doesn't it? Or should do. Bottom of channel 2. Yeah, okay, I get it. Where you going to, mate? Monthly pivot, maybe? Then look for a lower high off these highs, or maybe even up here somewhere. No, I get it. Okay, nice. Nice, nice. The only thing I don't like, of course, is the fact that oil is going nuts, and I don't really have a lot of stock in the euro at the moment. Although Ash said there's a lot of good stuff going on there as well. So, yep, good one, Lewis. I like it. There was another question too, I think. Oh no, that was a bye Ash thing. Okay, right. Let's go back to today's game changer bars, and we'll have a look at those. Aussie Cad. Now, those of you who are unaware of game changer bars, very, very briefly, once again, it is a bar / candle whose, if you're going this way, whose low is lower than the previous day and closes on or near its high. This one certainly qualifies as a game changer bar. However, you just don't trade like anything else. You don't trade a single bar unless it has a lot more going for it. So we're talking context here. Now, the context here is absolutely, couldn't be clearer. You've got a big bullish engulfing bar. You've got a potential higher low It's only a potential high low. It may well be. But you've got a big thing here called the monthly pivot, which is very, very close to a weekly pivot, which is untested. Untested is good because it tends to draw price towards it. Monthly pivot, not untested. But once these pivots are tested, they tend to go and force price in the opposite direction. For how long, we never know, of course. So if you've got your stop down here, it may well be safe even if that were the case. But trading straight into the monthly pivot is just not a good plan for me. So I wouldn't take that trade. Maybe if we break the pivots, then come back, you're getting a good indication as to what's going to happen. But context is everything with these. You must trade them in context. They are not isolated entries at all. So Aussie CAD was the first, Aussie Swiss was the second. And I thought Aussie Swiss, pardon me, this is on the daily chart, not the 4-hour chart, by the way. Daily chart lower than the previous day, closed on or near its high. This one better, not perfect, but better. Better because there's no monthly pivot dead ahead, but there is a trade line dead ahead. So you're still trading into resistance. So the best way to play that is to wait for the break and retest. You remember last week, or was it 2 weeks ago, we were talking about this pair and we were saying, so when price was up here somewhere, is this a great bar to take to trade? That's 2.5 weeks ago or 2 weeks ago. Should we trade that bar? Okay, we're trading into the weekly pivot. You could take profit there. So that would be okay. But doesn't it look like it wants to form a right shoulder? And that right shoulder should well and truly be at the monthly pivot or a little bit lower. That's exactly what has happened. And if you're around at the right time, you probably could have got into that trading that bar short. Getting back into the long, I don't see an entry there for me, but there may well have been at some stage on a smaller time frame. So these are the kinds of things that that really do give you a far better indication as to how to trade these bars that do come up each and every day. They come up every day, but you've got to recognize that there's context around them, and you shouldn't be just going, okay, it's a great scenario. It's a great example of that condition, but it's only one of the conditions. The third was Euro Swissy. Euro Swissy, again, that line there is problematic. You've got a high higher than the previous day, and it closed on or near its low, which of course is exactly the same as going the other way, but in reverse, as you might imagine. So your entry would be there, your stop loss would be there. So there's the risk that you'd be taking on that particular trade, which would be approx 50 pips. And you're trading straight into that red line, which is about 8 pips. Risk to reward? No, it's not real good, is it? So again, for that reason, not a good idea. That doesn't mean it won't go, of course. And you do have an untested monthly pivot here, which is very attractive. I'm more than aware that that's a good target, but no trade for me. The fourth and final was Euro Pound. And I'm a great believer in Euro Pound short. Got a nice double top there. We're waiting for a lower high. We really haven't got that. The setup bar is this one. High is higher than the previous day, closed on or near its low. And the best way to trade this, as I said this morning in my preview, would be wait till the daily pivots are tested. And if that became an inside bar, which it won't be because the low is lower, it would be a great one to trade. I still think that will be the case tomorrow morning. If this candle closed on or near the pivots and doesn't get more than halfway into that bar there, I think there's still a good chance to play that as an ABC, maybe even a double cross on the pivots. That would make sense to me as well. But as far as all of those ones are concerned, I think the context around them was poor, apart from Aussie Swissy. I thought Aussie Swissy was the best of them, but I still want to wait for that break and retest before I get into it. That may be too late. It may not come, but there it is right now. So on the 4-hour chart, that does look like it might be tradable to the high side. You've got to watch that next level there. So 14 pips versus 31. Wow, that's bang on the money, isn't it? that should be okay. So we've got, what, an hour and a quarter before that closes. If that closes as such, that may well be a trade long on Aussie Swissy. Again, as I've said, many times over the last couple of weeks, I'm struggling to get enthusiastic about the Aussie until we get all of those scenarios that I've mentioned day in, day out of the way. It does appear, or did appear in the last, like Friday, Monday, that the market had gone risk on. But as I said to Ash just a little bit earlier, and he agreed when he looked at the VIX index, that the market does seem to be, in my opinion, flip-flopping between risk on, risk off, and today looks to be risk off at this very moment. Let's take a look at the dollar index. I'll have to switch charts again to that one and move that to there. Dollar index is there. Okie dokie. Big picture on the dollar index gives us, hang on, I've got control panel issues here. Gives us, a confluence area, really. And really, really tricky. I believe really tricky. Why? Because I can see this level, and I can see this level being tested, which is around about the 94, almost up to 95 mark. There's a big W sitting there, which tends to suggest that we are going there. We've had a fair bit of consolidation at this level. We've had another fair bit of consolidation on the other side. So if you're looking at the symmetrical scenario, as I do, you can see this equals this. Does this equal this? That's the question that's in my head. I'd love to see this level break and be retested, or even the next candle on the weekly chart come back to here, and then I'll get a far better shot at trading that to there. At the moment, on a daily basis, on a daily bar, all it's telling me is we're at that resistance level. It's not giving me a go signal at all. In fact, it's garbage here. Pardon me. Yes, it's breaking that level, but we're head on into the next one. So a little bit tough to predict, and that's why I think the euro in particular is a bit hard as well. But whilst ever we're at this resistance level, you've got to remember that this really is an upside down version of euro dollar at the end of the day. Why? Because that's the major volume that's traded, euro versus the dollar. So it's very much a reflection of euro dollar. But I always like to check it just in case there's something there that I'm not seeing on euro dollar. In fact, there is a little bit difference. And that difference is, if you remember, euro dollar is, or has poked its head down to that level there, if you like. So we're not there yet on the dollar index. I'll just quickly go back to the euro and remind you, if I can find it. There it is. So daily chart in the euro, we're down to this level, right, which is the most recent low. And we're having a little pause at that level. But the dollar index is not yet there. So that tends to suggest to me that we're still going to see a bit of upside with the dollar today, and therefore probably euro dollar is not going to go high at all. But when it does get to there, that's when I'll start to concentrate. And if we come off there and get a lower high, that's when I'd like to jump into the euro. So it's not 100% clear to me at the moment. Nor is a lot of stuff. So I'm going to have a look at the weeklies, unless somebody's got something they want to look at. The weeklies, which showed me, as I said before, that CAD Swiss was the best of them for this week. Best of the key reversals, which of course are my game changer bars. I'll go through this just one more time. There's the bottom of that range, which has been there since 2015, right? Since the decoupling of the euro to the Swissy. And we broke below it in 2020, I think, is when we dipped in there for 10 months or 11 months. Then we came back into that range and that's where we've retested the bottom of that range. Now, that's why I think this has got upside. Okay, that's a monthly chart and it may not take off anytime soon, but you've got a very, very key indicator there, no chart. Am I still on dollar index? Sorry, guys. That's the worst, isn't it? Let me go to that one. Sorry about that. So very, very quickly back to that. There's the range since 2015. Ducked below it in 2020. Briefly 11 months worth or 10 months worth, broken back into it. We've now retested the bottom of it. So to my mind, the course of least resistance would be to go up to here at some stage. Weekly chart, as I said, was a game changer bar at a resistance level, no question. And that makes it a little bit more difficult, but the direction in my head is 100% long. So all I've got to do is get the right signal here and I'm away. I was hopeful that I'd get a pullback to the trade line, this being the trade line, so I could launch into that. But because I'm not in front of the charts, there's your pullback right there. Have you got an entry? Maybe, maybe not. Depends on how you trade. It's not an entry for me. I haven't really got a true entry there. So I'm still waiting and waiting patiently. Look, I could still get there. We could get a false break of support, and that's pretty much what I'm looking for. So I thought that was the best one of them for the week. Pound CAD was another one. And if you look at the weekly chart on Pound CAD, it's a massive game changer bar. It's taken in the last, well, what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, really. Just that one bar has obliterated all of that price. And for that reason, it would have been very easy just to place an order below it. That's not the way I work. Again, I use the context, and the context is telling me I'm only going to there before we pull back. So I'd much prefer to wait for the pullback and get into the market off the level that I see as the pullback level, which of course is the pivots. So if we got to the pivots, then I can look for the lower high based off this triple top I've got here. Lower high in here, a bar, something like that would be absolutely glorious at that level. So that's what I'd be looking to do on Pound CAD. The third was Pound Kiwi. And Pound Kiwi, those of you who have been following this show for a while will know that I've been long Pound Kiwi for God knows how long, months anyway. And based on this chart, I'm starting to get a bit of a hint that we're going back into profit at some stage. So what we're actually trading here is the false break of this ascending channel. So you know yourself, right, that most breaks are false because everything tends to go back to the middle most times until you go into a strong trend, blah, 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 blah. But even then, you know, currencies are tendency or have the tendency to go back to where they've come from. And that's generally the middle. If do yourself a favor, if you don't understand that, and have a look just about any chart, pull up any chart and have a look at the monthly, go as wide as you can and see how many times it's gone from the bottom to the top to the bottom, and always back to the middle. This chart's a perfect example. It likes being in here, right? Doesn't like being up there, doesn't like being down here. Same here, same here, same here, same here. It's doing it all the time. So if you can pick up these little hints that that's going to occur, then that does make a big difference to the vision that you have and the directions that you want to trade. So we're doing a similar thing here at the moment. And the daily chart is giving me that strong indication that we are done with below that ascending channel, and we're going to have another crack at going to the top of it, which is probably nearly 3,000 pips away now. Yeah, getting towards it. You know, by the time you got up there, you're probably talking somewhere between 2,500 to 3,000 pips. I have the firm belief that that's possible. It may struggle here, which is getting, I think that was 2,000 something pips anyway, nearly 2,000 pips. And I think we're off a risk of 350 or something like that, if I recall. That's like too long ago. That's back here somewhere. Sorry, that's where I entered the market there. So there's the risk. I can tell you that straight away. No, it was 600 pips. To get 2,500, that's fine. It's just you're in the market for a long time. And if the swaps are not good, then you've got an issue. So back to this week, that's showing me a not strong, but game changer bar that I love. I love these bars, these red bars that are telling me, no, I don't want to go I don't want to go short, and I'm starting the long journey here. That looks to be a pretty good lead for what is currently happening. May not stay that way, of course, but I'm hopeful that we'll at least get to the monthly pivot before we then retest the top of the top side of the bottom of our channel, and then we can look to go long again. The last one was euro dollar, and euro dollar, as we have discussed at length. No, it wasn't. It actually wasn't, but it was my favorite, right? That's right. It was my favorite for the week in terms of non-game changer bars. And the reason is because of this level, which is, as I pointed out before, the beginning in my mind of a range. We've had a bit of a downtrend, and now we've gone back into range, similar to over here, right? So that's what I envisage is going to happen over here. And if that's the case, then we just need to look every single day. And if we get a signal that's a higher low in here, and then we go to the top of the range, and then we get a signal up here that's a lower high, then we follow it to the bottom of the range until it breaks out. And when it does break out, we look for it to come back in and turn into a false break. That, guys, is exactly how I play the game, especially these days on the bigger time frames, because I don't have time to be in front of the charts. But that's my MO every single day of the week. Righto, can we trade this thing? Not yet. Now, I said before that the only way I could trade euro dollars today would be certainly long, but I would need a reversal pattern. This is the 30-minute chart, which is giving me a recognized reversal pattern. Some people call that a morning star. Other people call it a 3-bar play. Other people call it, there's another one. I can't think of what it is. So I'm okay with that. It means the market can potentially reverse from here. But here's the thing. I need to see this now either bounce off this level or come into this area, then fail at that area, come back and retest that level there, or a level somewhere over here that I can't see in my chart. But that would be the ideal scenario. So break above, come back and retest, and give me something that looks like that even, or that, better still, because a red bar going long is far preferable to me than a green bar going long. Totally counterintuitive rather, but it's the way I swing. But a lower low after a lower high. Sorry, Lewis. I was obviously talking about something on euro dollar. Euro dollar, if I'm at the bottom, I'm looking for higher lows. If I'm at the top, I'm looking for lower highs. Yeah. And that's any single chart. Don't care. Whatever time frame it is, that's exactly what I'm looking for. And even if it's a channel, even if it's a triangle, and yes, even if it's a circle, but I don't see too many circles, that's for sure. But it can be an ascending triangle. There's an ascending triangle right there. Let me draw it. I don't care what it is. If it's doing the same thing all the time, then I want to know about that. So if it's bouncing off here, I'm looking for a lower high to trade it down to here. If it's bouncing off here, I'm looking for a higher low to trade it up to here. I don't see too many of those on this particular chart. But then I get a breakout, and if it's strong enough, that's potentially tradable. If it's not, comes back and retests, can't get back into the triangle, then it's really screaming at you that the next direction is short to a support level where you must take profit. Then you get another chance maybe. Or if you're still in the trade, happy days. But, you know, it's the same thing. That there is a range to me. On a 1 minute chart, there's probably every opportunity to trade that from top to bottom, bottom to top, top to bottom, etc. On a 1 minute chart. I can't do that because my heart my heart can't take it. I'm not fast enough these days. Okay, so there's your little break above that level. I'd still want to see a better break than that probably, and then come back. I don't want to see it happen in one candle. I want to see this sort of thing. So you get a swing effect, right? Come back to there, then give me the rejection. A little bit slower than what's happening now. If we anticipate a higher dollar index, then a further drop in euro dollar, yeah, totally. And that's like what I said before. That's why right now, right this very moment, the dollar index is super important. Why? Because it's going to tell you what's going to happen next. Let me go back there. It's going to say, okay, we are going through this resistance level, or we are not. Dollar index is there. So that's why I say it's a little bit confusing at the moment, because we are at a resistance level, but that's perfect because all we need to do is wait for the candles to tell us whether we're going through there or we're coming back. I can't tell at the moment because that's just a heap of garbage there right now. But if we take out that high and fail to come back below it, then guess what? Dollar's going long. If we get a breakout and we come back inside or underneath that, then dollar's going short, euro's going long. To me, that's a pretty clear picture. Now, I don't see the answer to it until I get that indicator. And that indicator here is very, very clear. Again, you go back to the market structure. The market structure is, in my opinion, a big W forming. And we've got exactly here what we've got over, sorry, we've got exactly here what we had over here. We're just waiting now for price to tell us, okay, breakout, dollar long, breakout that fails, dollar short. So euro long, euro short. So at all times, we can take a guess and say, oh yeah, we're going here, which I believe we will. But that doesn't mean I can back that, because the price is not telling me that right now. Price is telling me we're at a resistance level. So I can't go long here. If we break that resistance level and come back and retest it, happy days. But don't forget that most breakouts are what? False. Exactly. So until it happens, I can't judge it. If I get a slingshot set up in room to take profit before that high, then I could probably have a crack at it. Like I said before, if I get a big pullback here on the weekly chart next week, then I can play that. Because then I'm saying, then I'm saying, if I get a big pullback with a red bar, right, after this bar closed there. So say I got that bar sitting here. I could then put a high above it, pardon me, if I can take profit before that high. The reason that's a good thing to do is if these dudes here turn up over here and they're serious, they'll drive price back down to the bottom of this trend line or beyond, who knows. But if they're not in control, then guess who are? These ones. And whilst they're fighting down here, if they come back to that level after a sell-off at that level, it's my belief that they'll have enough strength to go through and test that high. And that's where I need to take profit if I do that. So I'm always kind of counterintuitive, if you like. I don't like to follow these bars short. I like to say, okay, if these dudes aren't in control, it means these ones are, and they're going to be wrong here. And there should be enough momentum at that point to drive me through. And if they're wrong here, that's where their stops are, right? Above that bar. Guess what there are there? If they're short and their stops are there, guess what they are? They're buy orders. And buy orders should give you that momentum to take you through to the next resistance area. That's very tight and be very hard to get profit in there, right? But that's the theory. Well, it's my theory anyway. So you're picking up liquidity at the top of that bar going in that direction because there are stops there. You know there are stops there. And I think that's what I look for more than anything, I guess, and mostly without even thinking about it. Because the candle patterns that I trade are predetermined in that vein, because that's why I trade red bars long and green bars short, because I know underneath those green bars there's going to be a stop loss. And if there's a stop loss there, and if there's a truckload of stop losses there, they're going to pick me up and take me to the next support level. That's the whole theory behind the slingshot, basically. Okay, diddly do. Have we got any other questions? Probably not. Then I think we're done, guys. Aussie Swissy coming off. CAD Swiss. Yeah, it does look to me like the market has changed its mind and is going a little bit risk off at the moment, which is very interesting. Away for a while. Where you going, mate? Not telling me. All right, folks, that's it for today. Thank you so much for your company. I hope you've gleaned something out of it. I'm finding it very, very difficult to get in the market just yet, but I've given you a few ideas. You went away I thought you were going away for a long time, like on holidays or something. You're welcome, Agnes. No problem at all. I hope it's not too confusing for you, as I know you've only just come into trading and learning the daily wave rider at the moment. So you're probably thinking, what is this guy talking about? Because it's kind of a long way from wave rider territory. I don't. Yes. Look, just take it as it is for now, Agnes. And I guess if you pick something up each day that makes sense to you, then happy days. And it has to make sense. Otherwise, you go, ooh, really? That's not for me. And that's perfectly okay. That is perfectly okay, because you may not even be suited to the way I trade. Certainly, I'm not terribly suited the way Ash trades. But somehow, you'll find a way. You'll find which way is your way. And that's the whole point of being exposed to a lot of these different ways to trade. And there's so many. It's just crazy. Just crazy. There'll be one for you. You'll find it. Awesome. Okay, guys, back tomorrow at the very same time. And we will be talking gold and oil with Ainsley. And, of course, we'll be looking at these potential positions. And I hope I can find a long on the euro, because that's what I'm seeking to do. But dollar index will be the pointer there, I think. Have a great rest of Tuesday, folks, and we will catch up with you tomorrow at the very same time. Have a good one. Bye-bye.